The past administrations, the U.S. Stock market has done very well under almost every president. The purpose of this conversation is to talk about the economic impact of either candidate.
Welcome to the Swiss Money Secrets podcast, a podcast designed to cover all things offshore investing and banking from the Swiss perspective. Let's get into it.
We're excited to jump back into it with a very hot button topic of the US and the elections coming up in about a week from now. We're going to really try to cover what both candidates, whoever takes office, whether it be Kamala Harris or Donald Trump, what the projection, I guess, of their spending plans, fiscally, their fiscal responsibility will look like in terms of what they've proposed, and try to help understand what the effects will be for the economy, not just the market, two separate things, and kind of give our listeners a good picture of what can be done about it. Before we get into that, the US election, why are we in Switzerland? Why do the Swiss care about the US election? Maybe you could give some perspective, because as an American, I never understood when I lived in the States why people cared that were from outside the country. So maybe you can give just a bit of perspective to that.
Yeah, absolutely. I'm super excited to be back as well. It has been a bit of an extended summer break, but it's good to be back. I think when we talk about the US election, to me it feels like every election cycle Swiss people have cared more about the election, and I think one reason is that the elections seem to get more dramatic every time, and the other factor is certainly social media and the internet, that the US feels a lot closer to us than maybe 20 or 50 years ago. When I look around, the media is pretty full with coverage on the US election, and when I talk to friends and business partners, even if they're in a different sector to us and not directly working with US clients, most people seem to be following the election somewhat closely, or at least passively. The people really invested in the election, I think, fall probably into three categories. So the first one, and I think that's where we mostly fall into, is just business people, economists, politicians who will be affected, or who are more interested in the effects of the US election, because the US election is certainly going to have an economical impact and also an impact on the geopolitical situation in Europe. So I think people who trade with the US, people who work with US clients, people who have investment portfolios, again, politicians, people interested in geopolitical conflicts, they are certainly watching the election very closely. Then the second a group of people who I find is particularly interested in the election is now women. So my social media feed is flooded with people who are very excited about the female candidate. And then the third group of people that I think is interested are people who just like the drama and entertainment of it. We have spoken about that in the office. As a Swiss person, even though you are somewhat affected in the mid to long term, you are not directly impacted in your day-to-day life. So I think it's much less dire and serious for people in Switzerland. And the political system, while it is similar in many different ways, the drama is very un-Swiss. So Swiss politics are very boring. And I think a lot of people who are not really interested in Swiss politics are really interested in the US politics, because they are just more dramatic, more emotional, sometimes also easier to follow. It is more done through popular themes and themes that are easily understandable, and there's less talk about the complex underlying topics. At least that's my opinion. Is that similar to what you're seeing as an American in Switzerland?
Sure. It is obviously interesting to have that outside perspective as an American in Switzerland, looking back into the country of my origin, where my family still is, where I still feel very invested. I do think that's a good categorization of the people, I guess the Swiss public, of why do they care, especially in the business world, because Switzerland is such a small but diverse and very dynamic country when it comes to international business relations. And the US is a big part of that around the world. And I think that's the biggest, for me, learning as an American when I moved outside the States, learning that the US does affect so much of the business around the world. And so there is this vested interest in knowing what's happening or which direction the US is going. Excuse me. Oh my gosh. And so finding that direction and understanding is also a business planning thing. And I think that's where you see, as you mentioned, the most interest in the elections, because it could have an effect on their daily life.
Yeah.
Now, I think there's obviously, I think you said it correctly, that it has gotten more interesting through our lifetime with the election cycles. And it is way more entertaining today to watch, good or bad. There is more entertainment factor to watching people like Kamala Harris and Trump come out. Their ability to speak to the camera, to be on media, to use, all the channels. We think about TikTok and Instagram and YouTube, and the ability to get these entertaining clips within 10 seconds is right at their fingertips, something that's never really been there before. Yeah. We've seen that, but that's obviously heightened it. And the US is great at social media. It's great at production of content. And so it makes sense why it's going to be pushed to the world. And the US, the government and the people, we still think of ourselves as the world leader. Whether that's correct or should be the right mindset, that is the position we feel.
Well, I think most people in Europe or around the world would probably agree with that, which also makes the election relevant for almost everyone on the globe. What's also very interesting, which a fact that a lot of Americans probably don't know, is that the US is the biggest trading partner from the Swiss perspective. So we export most of our goods and services to the US. So that's certainly a big factor. And then also with the war, especially in Ukraine, that broke out a few years ago, I think just how the future administration is going to view supporting Ukraine or how much they're willing to invest into NATO is certainly something that is a lot of people's mind in Europe as well. What I find interesting and also a little bit worrisome is in Switzerland generally we have a very high level of trust towards the media, the government as well, but also the media. And I think there's some left-leaning media, some right-leaning media, but generally most media, they agree on the facts and the baseline situation, and they have a little bit of a twist or an opinion here and there. But generally speaking, we trust the media to be accurate and neutral enough. And what I now found with the reporting on the US election is that there's a lot more questioning of the Swiss media as well in the way that they report on the US media. And to me, it feels a little bit like an import of distrust towards the media. And I haven't seen that in any other areas other than people just questioning facts and information that is being shared on the US election. But that's a trend that, as a Swiss person living in Swiss democracy, eroding trust in media is a very bad sign. And that's one of the big problems in the US.
Yeah.
And I hope that that's not a trend that's going to continue in Switzerland, that's really just an isolated topic relating to the US election, but I guess that is to be seen.
Yeah, and I think to not go too far off on that tangent, because we really want to get into the economics of everything. But yeah, it's a challenging. I'm a person who listens to both sides. When it comes to voting, I want to understand what the outcomes are going to be, what the projections are, where, in what direction. So I'm willing, with an open mind, to listen to both candidates. And often you'll hear the same fact, but from two different sides, and somehow changing facts on the same topic. And it is hard. It's hard as an American with such polarized media outlets to decipher what he said, she said, back and forth. What is the situation? And so for me, I come down to looking at, okay, what is the economical push? What's the economics of both of these parties? Obviously, I'm in finance, so I think about it a lot more. But with that, let's transition into kind of what we see from, if Kamala Harris wins, where are going to be some of the sectors that we see a lot of their spending going on. I mean, we're going to get into, when we really get into it, they both plan on spending a lot of money, and the deficit that the US has that we talk about, it feels like endlessly here, is going to increase. Yeah. So, okay, so that's one thing to see as a fact, but where are we going to see opportunities for the economy, potentially for the market as well, should Kamala Harris take place?
Yeah, I think one thing that I would like to emphasize that you now briefly mentioned is that in this, like, purpose of this conversation is to talk about the economic impact of either candidate, and potentially also what that means for your portfolio, how you can set yourself up to essentially election-proof your portfolio in a way. We are aware that there's dozens, if not hundreds, of different topics, and every voter, of course, prioritizes for themselves what is important to them, and we are not experts on all of those topics. Yeah. And me as a Swiss person anyway, I'm an outside person, neutral outside person looking in, and it's important for me that the audience and the listeners understand that we are really just focusing on the economic side of things, and we understand that there's other very important topics. Yes. That might be more important to people in the US than the economy, but us as wealth managers, as people in finance, we want to stick to our lane and discuss where we really have expertise. So when starting with Kamala Harris and where we see opportunities if she wins, I think one of the factors that's certainly going to benefit more under her is going to be green energy. Yep. And the whole like grid system, and with that also infrastructure. The problem is always, that's a bit of a caveat to this conversation, I think a problem everyone has who analyzes those kinds of things is we can only go off on what she says and also what Donald Trump says now during the campaign. But the past has shown that what people tell us or the American public on the campaign trail might not always be what they're actually going to execute, yeah. Whether they change their mind or it's harder for them to execute than they expected. I mean, it also depends what's going to happen with Congress, etc. So based on what they say or what she said in the past, I think those are the sectors that are most likely going to outperform. Do you agree with that, or what are your thoughts?
I would say I would add maybe one or two more sectors in terms of a Kamala Harris win, just basing it off of what we've seen in the past from what she said, and also what has been spent on, where money has been, I guess, funneled to in a Democratic controlled presidency and Congress. I mean, obviously, as you mentioned, Congress holds the strings to the purse in the U.S. in terms of where things are going to go. The president more just has approval or disapproval on the final laws, essentially. And so on that, I think I would add two more areas, and that would be healthcare. There's been a lot of funds moving towards healthcare. I mean, even if you look at the job creation numbers during the Biden administration, heavily in the healthcare, heavily in the government sector in terms of where money's going to go to. So I would say healthcare is going to be big there. I mean, government jobs, that's not really a sector you can get so invested into. But yeah, I think those are a good purpose. I think one thing that's quite interesting when you bring up the grid and infrastructure, especially the grid, the US grid and even the European grid as abroad, they're very old. They have a lot of work to be done. And updating the grid takes decades upon decades to do. And we've seen a lot of spending there. And I would say that that's an area that we will keep seeing spending in. So I think that's a really good one to bring up, because regardless of if Donald Trump or Kamala take over, the grid needs to deal with new energy sources that they're trying to push. And as you said, the green technologies with Kamala Harris, we're going to there's going to be different complications in terms of power generation, and that's that infrastructure for the grid. But the grid is still going to be able to have to be able to distribute that power in an age where technology is booming. I mean, there is so much energy needed from these IT or tech and communications companies that there's going to be this need, and there, it's been pretty clear that there's going to be more spending there from Kamala's side. So I think that was a very astute point to bring up of where we see it based on what she's saying, and also from the trends that we've already seen.
Maybe before we move on to discuss what will be happening with the Republican win, we can also talk about the risks that we see.
Yeah.
And I think a big topic that's certainly on the mind of a lot of our listeners is the tax raises that are being discussed or proposed, and also heightened inflation again.
Yeah.
I mean, a lot of spending and money printing comes with inflation, and then just more and more regulation. I mean, we have heard about Kamala Harris, what she did during the financial crisis, and she was very big on highly regulating the financial sector, and I think that's something that she might continue to do if she were to win. That we will see that doing business will become more burdensome and more administratively heavy.
Yeah, absolutely. I think that is, I would say, in looking at the economic factors that are not just tax cuts here or there, or tariffs here or there, or no tariffs or more tariffs, that's one of the biggest differences between the two is the regulation versus deregulation, where Kamala Harris has been pretty outspoken about wanting to bring in more regulation. What sectors? Mostly the financial sector is where we would probably see that, but also in the energy sectors. So, there's been some back and forth on it, and we've gotten a little bit of mixed signals from Kamala Harris in terms on what will she do with oil and gas versus clean energy. I would say I would tend to think that she's probably going to lean more to continuing to fund green energy. Whether she starts regulating seriously when it comes down to the rubber meeting the pavement, will she go against the oil industry? I think we'll have to see. I don't think we can really call that out quite yet. But I do think that the risk of over-regulation or more regulation exists, and that's something that people should be aware of, because that, just like taxes and just like spending, can have a massive impact on companies and how they're able to navigate and continue business. I think innovation is always a good thing. So the U.S. is still, for that, in a good place to find innovative things and to move forward and to overcome some of these. But it could create a drag on certain industries, especially when it comes to energy production.
Yeah. You want to move on to Donald Trump?
Yeah, so with Donald Trump, I think the key areas that we've seen, again, kind of mentioning the energy, oil and gas, he's been pretty bullish in the way he talks about it, of wanting it. I think in terms of the grid, I believe there would still be quite a lot of spending on the grid as well. So that's where I would say they kind of both line up, a kind of a bipartisan area that I think money will be spent on. Also, defense there's going to be a lot of spending on defense. Now, on a personal note, think that there's going to be spending on defense regardless. But he has, in the past, seemingly been just as bullish on spending on defense as everyone else. I think that's about what I think. Do you have any more that you saw that you think
I think
poses opportunity?
I think, broadly speaking, the financial industry is probably going to do better under Donald Trump, and then also more specifically, the crypto industry seems to be very bullish on the thought of having Donald Trump win. They are putting a lot of hope and also a lot of money into the election, trying to get Donald Trump in, because they hope for a more innovative mindset, because we've seen now this year in January, the SEC has approved the first spot ETF on Bitcoin and cryptocurrencies. And that has been a long time coming, and the industry has really fought very hard for that. And they do very much expect to have a better environment under Trump than Harris.
I do think a lot of that comes to the fact that he openly talked about deregulation.
Yes.
And those
Absolutely.
industries tend to do really well with less regulations.
Yeah, for sure. And then I think if we talk about the risks, then it's probably a little bit of a mirroring the opposite of the Harris campaign, right? So green energy funding will probably not be very favorable under Trump. And then the risk, and we're going to talk more about that later on as well, is just the continuous spending. So when we look at some numbers, and we always try to look at bipartisan numbers, we see that under both Harris and Trump, the spending will increase significantly. And again, it's estimates because we don't have a crystal ball. We have to go off what they say on the campaign trail, and depending on the day and the weather and the crowd, what they say can be a little bit different. And then oftentimes it's also not written policy proposals, but rather like a sentence here, a sentence there. So those projections have to be taken with a grain of salt. And if we go with the bandwidth of like minimum spending, maximum spending, essentially for every single scenario, for every single candidate, spending is gonna go up. And I don't know, unless you have something to add to Donald Trump, I would suggest that we segue into the next topic that we want to cover, and that's just the long-term trend and the systemic problems that we see in the US that we believe are going to remain irrespective of who wins. And we have written a report on that. It's called Election Proof Your Portfolio. I assume we can link it in the description.
Will be in the description.
For those who are interested in downloading it for free, over 20 pages, we go into a lot more depth regarding all those things that we are now scratching the surface on. But essentially, our stance as a company, and also my personal opinion, is that people get way too lost in the noise and the short-term panic that is being caused by the media and the candidates themselves, and that they lose track a little bit on the long-term direction. Because all the systemic economic problems that we see, and that's overspending, so an increase in the national debt, very high interest payments. So I think interest payments are now the biggest part of government spending, which is just insane.
This year they overtook defense.
Yeah, that's just
wild.
Crazy.
Yeah.
And then also there are various funds that are running the risk of going bankrupt over the next few years. Yeah. And I think those three main topics, and I think then as like a sort of side topic, we can also talk about the currency devaluation, which is one of the symptoms and consequences of those structural problems. They will stay bad and get worse irrespective of who wins. And I think it's important to take the election seriously, do your due diligence, vote for whoever you believe is going to represent your interests best. Absolutely. But keep in mind that for the serious economic problems that we see, neither candidate has a solution or cares about finding a solution. They don't even really talk about it. And that's a big problem that I think the media neglects to talk about.
Yeah, I think that's a big issue. And there's some, I think the currency fluctuation is one that's obviously for us very important because we work with American clients and are getting them out of the US dollar in our practices. So I think we should really get into that a little bit down the road in this conversation. And I think one of the points that's a really tough one to handle is the lack of fiscal responsibility that hasn't always been the case in the US. I mean, the US for a good chunk of time had healthy debt levels.
Yeah.
Similar to Switzerland. And I mean, we're talking in even our lifetime. The beginning of our lifetime, to be fair, the spending has always went up, but they were able to keep the debt levels at a certain point. But then you start to see really in the 2000s, a little bit before, in terms of spending, it really skyrocketed, started in the Reagan era, and that's where the deficit really started going up. But what we see out of a deficit, you can have debt as a country.
Yeah,
there can be positive impacts on the economy, on the population, with even a fairly high amount of debt. I mean, I think it's up to about 72 to 75% of debt to your GDP can actually improve the economy and life and people's life. But the moment you go above that, it starts to weigh on the economy and drag things down. And we've seen that in our lifetime, especially, absolutely skyrocket in the US. And so I think, it's been a long time. And so people kind of have gotten used to just debt increasing. But I think we have to try to really impress the point that, hey, no, there is a way. They were at a very similar debt level post World War II.
Yeah.
And they brought it down.
Yes.
And so,
and we're not in a world war right now.
Correct. But my point is, they've had high debt before and were able to bring it down.
Yes.
Now, we can. It's a much longer conversation about how they got that debt level down. But it shows that there is the potential for the U.S. to have this healthy level of debt, and it can be accomplished.
Yeah.
But that's the issue, as you were mentioning, that we do not see in either candidate a willingness to slow spending, or at least try to do things that will actually bring that deficit, because that's the biggest issue, is that they're just going to let these whatever tax cuts or tax hikes, they're still letting the deficit continue up. Excuse me.
We always look at debt to GDP, right?
Yeah.
So the more money you have, the higher the level of debt can be. But that means that you also have to grow the GDP to be able to make more debt. And when I look at Harris and Trump's proposal, they're different, but both of them do not seem to be particularly good for growing GDP. Mm-hmm. I mean, when we look at Harris's proposal, I cannot imagine that I understand the economy better than her, because I'm sure she's surrounded by very smart economists. What they're proposing, for example, $20,000 for people who are first-time home buyers. You cannot just hand out money and print more money and expect that to not have an impact on the general public and the economy. That's not going to be good for the economy. And then also, I'm not sure if she has moved away from that position already, but in late summer, there was this talk about essentially limiting the prices of groceries. Like you cannot plan the prices of groceries from your ivory government tower. This is a very liquid market, and it will find its equilibrium, and there's very small margins on grocery prices already because there's a lot of competition. By just limiting the price that suppliers can provide, that's going to be horrible for the economy as well. And then on the other side, Trump, who positions himself as a I guess economy friendly person or politician, he loves tariffs, and tariffs are terrible for the economy as well. So all those proposals are not going to be great for GDP growth, in my opinion.
Yeah.
And on top of that, they want to spend more, even more than the US is already spending, and that's just for both sides not a great standpoint.
Yeah, and I would take maybe a slightly different tack on tariffs. They can be beneficial to an economy in the short term.
Well, yes.
Correct. And so that's why some of these proposals sound very interesting, because when you hear them, you think, oh yeah, put a tariff on. We do business with the whole world. Yeah, we should get those tax dollars. But hold on a second. There's already a movement trying to get away from the US dollar, trying to get outside of the control that the US dollar has around the world right now. And if you start slapping crazy tariffs, hey, that's just going to accelerate that trend, and the relevance of the US dollar could potentially see an incredible weakening because of that, because businesses will say, hey, we're no longer interested.
But it's also just going to increase the price for consumers.
Correct.
So, I mean, selective tariffs on certain countries in certain situations, sure.
Correct.
But to just slap 10 or 20% tariffs on anything that's being imported to the US, that's going to hurt the US economy too. And you already mentioned that there's a trend away from the US dollar, and we see that when we look at the reserve rates that central banks around the world, how much US dollar is being held. And when we look at the numbers over the past 10, 20 years, that has gone down pretty significantly. We're still at about 58% or so it's still high. And we're not saying the US dollar is going to collapse or become irrelevant next week, but it is a downwards trend. And I think this is the tricky thing with slow movements in a negative direction, right? I think everyone waits on a dramatic collapse or a dramatic change of everything, but I think much more dangerous is the small steps in a bad direction. It's like with the frog where you put him in.
I was thinking of the same analogy. I was coming with it next.
Yeah,
but you got to it first. Yeah, slowly raising the heat.
Just slowly raising the heat, slowly raising the heat. And if you put the frog into boiling water, it's going to jump out.
Yep.
But if you just slowly increase the heat, it's not going to realize it. And I think that's what's happening with a lot of the economic directions that the country is taking. And that's, to me, a lot more worrisome than the sensationalized short-term stories that the media loves to put out and to discuss and put on such a pedestal, where to me it's just a distraction from much more serious underlying problems that are just slowly getting worse.
Yeah, and it is one of those tough positions, I would say, as a politician who has 4 years. That's what's guaranteed if you only get 4 years. And a lot of voting comes from what I see from, I have momentary discomfort, or even if it's over 8 years, hey, I haven't been able to buy a home, because prices are too high and now interest rates are too high for me to afford the payments, and so a lot of these proposals for me feel like Band-Aids to exactly your point, this marching issue into really dangerous territories. Yeah. And that is for me the most concern, is because I do want my counterparts to be able to afford a home. I do want them to have enough room for their family and make enough money to provide. But there's a reason that these things are becoming harder and harder, and it's because it's been this long process of irresponsibility and slapping Band-Aids here and there. I mean, it's the typical thing. They create a spending system or a regime, and then they have to extend it, or it just ends. And then they come up with a new Band-Aid because it's a talking point for whatever reason, especially on the economy. And often what I find, which is hard for me, but I kind of get it to a point of when they talk about, look at the markets. The markets are up. We have a strong economy. It's like, but the markets, and we know this. If you look at the S&P 500, there's 5, 6, maybe 7 companies that drive it.
Yeah.
And you have to go really deep to say, okay, what's the actual economy? Because economy is different than the market.
That's such an important point. I think if we look at the past administrations, the U.S. Stock market has done very well under almost every president. Not every, but almost every. And I think what a lot of people also forget with this stock market performance, yes, it's only a few companies driving the market. That's a very important point. But then the other point is those performances are in US dollars. And if you have made 20% in the stock market, but inflation has been 10% during that time, it's not adjusted for purchasing power. And if you adjust the US stock market for purchasing power, it would look a lot less impressive than it does right now.
And similar to that, again, so let's not conflate the market to the economy.
Yes.
But when you have GDP as well, you have to factor inflation there as well.
Yes.
Because if with high inflation, it's easier to grow your GDP because you're pumping out money. There's more dollars circulating. It's going between businesses back and forth. There's more capital to be made. And if you're always measuring in US dollar, but the purchasing power is going down, but there's more US dollars, that can affect where GDP goes as well. And this is something that's always, the big talk has been that the deficit has decreased in the past 3-4 years. Yeah. You had inflation, high inflation, a year where it was 4% roughly, a year where it was 5%, a year where it was almost 8%, a little bit above 8% actually, and you're able to get rid of debt. If inflation is higher than your interest rate, it's cheap to pay off my debt.
And also, everyone talks about inflation being back under control, but the US is still at 2.8%. That's almost 50% higher than the 2% that the Fed is aiming for.
And that's year to year, so that's not the compounded inflation.
Yeah.
It's a nice talking point. Hey, we're back at our target inflation. Yeah, that's the inflation growth rate target.
Yeah.
That's not the cumulative inflation. And you're talking about the US that constantly runs inflation of 2.1, 2.2%. So you're talking about 20% inflation every 10 years.
Yeah.
and you add that up decade after decade after decade, it's brutal. I mean, just the case of Switzerland, again, different country, different makeup. But if you go back over the last, decade and a half, almost half of the years were surplus years.
Yeah. And also, I mean, the US dollar has lost about 80% of its value against the Swiss franc just in the past 20 years.
Yeah.
So those are all worrisome developments that, in my opinion, are going to continue irrespective of who wins next week.
Yeah.
And I think it's important, again, I can only reiterate, for a democracy, it's important that people cast their vote and say their opinion and elect whoever they believe is going to best represent their situation. But at the same time, think about the long-term developments and don't put all your trust into the government and whoever is going to run the next administration, because you need to protect your wealth on your own, and you have to be proactive about protecting what's rightfully yours, what you have worked long and hard for it to achieve. And I think it's very important that you don't panic about short-term developments, but rather take a step back, take a deep breath, and think about the long-term things you can do to set yourself and your beneficiaries, your children, your loved ones up for long-term financial wealth preservation.
Yeah, I think that's a great point. And that's, again, I'll mention the white paper that you wrote. Even though it's in our name, Jamie is the mastermind behind it. But that's the whole point of it is, hey, look, there are elections every 4 years, 2 years for the Senate and Congress in the US. So you are always going to have this changing, this volatility of political shifts back and forth. So that idea of, hey, how do I create something that will be able to be sustainable, preserve my capital regardless of those cycles? And that's where you start to look at, okay, am I well enough diversified? Is my wealth only in the US? Is it only exposed to the US dollar? Or do I have some exposure to other economies? Not just in those companies, but in their currencies. Because that's something that people often forget is they say, yep, I'm holding this world index excluding the US market, but it's in US dollar. So you still are exposed to the pressures in that US dollar, where you could be finding currencies in those companies that are actually more stable or hold their value against or even appreciate against US dollar. Now, betting on currencies is a challenge, and that's not, you shouldn't, I would never suggest someone go day trading on currencies. You're only going to lose. It's too hard. There's too many fluctuations. But what are the long-term trends? And try to ride the wave of long-term trends. And that's what we do. It's what we help our clients do is, okay, let's look at how is the world market made up of. 50% roughly of investments are in the US market. Well, how much is it now?
I think it's like 42%.
I said 50 or 40%. I couldn't, or did I say 60?
Yeah, you said 50 to 60.
I was wrong
it's below
then.
50.
Yeah.
Because this is also one thing that we see similarly to like the US dollar reserves going down, is the US market makes up less and less of the global market share. Of course, it's still the main market, and we're never saying get out of the US market completely. There's still a lot of value to be gained out of the US market. But I
was thinking about the products. The products of investment, 60% exist in the US. Yeah. But correct, you're right. But that means there's 60% of your portfolio that you could diversify, 60% of options. We also don't think that you should totally divest outside of the US market. There's great companies, there are good things in the US, good opportunities to be made. It's more about, does your overall picture match what you want for the long term? When you start to think 20, 30, 40, 50 years down the road, are your investment strategies aligned to navigate those?
Yeah, and I think just psychologically it can also take a lot of the stress out, because having to manage and invest your wealth can cause stress, especially if the US political system is as turbulent as it is. Yeah. I mean, we are days away from the election, and it's still a coin toss. No one knows who's going to win. No one knows that with either candidate what they're actually going to do. Is it going to be what they say? Is it going to be something different? And I think by just having a safe nest egg outside of the US, you can take a lot of that stress and worry away, because you know, okay, a part of my wealth will be much less to maybe even not affected by those domestic turbulences and those domestics up and downs, and you will just have some wealth that's stable and protected and outside of the US.
I couldn't agree more. Thanks so much, Jamie, for today. I think we'll wrap it up there. Do you have any final thoughts that we should add?
No, I don't think so. I hope everyone stays strong and patient, and that no one loses their mind over the election.
Yeah, and I hope that everyone votes for their candidate and remembers that your neighbor is not your enemy. And through communication and good fun with each other, we can all move forward in the world in a positive direction.
Thanks again for joining us on this episode of the Swiss Money Secrets podcast. If you would like to learn more about WHVP and what we do, check us out on our website at whvp.ch. Or you can check us out on any of our social media handles on LinkedIn, Facebook, YouTube, or Instagram by simply searching WHVP. Have a great rest of your day.